Yeah, that's probably even a bit light, right? If you look at post-halving numbers, I think 4x is generally what we've seen, but the sample size is. Everyone knows the themes we've beaten them to death here, sort of halving ETF, soft landing on the macro side, rate cuts, blah blah blah. I think roughly 2x for Bitcoin is a solid base case, and then beta off that. So Ethereum has lagged Bitcoin precipitously, roughly a 3x there. Yeah, that's probably even a bit light, right? If you look at post-halving numbers.
MV Capital CEO Tom Dunleavy predicts Bitcoin will reach an all-time high of $100,000, while Ethereum will reach $8,000 in his latest cryptocurrency market trends analysis on X. However, both assets are experiencing a gradual loss in market share as Solana will rally and gain momentum never seen before. From his perspective, Solana will rise in the crypto space, hitting $400 mark, marking a significant milestone in its value. His analysis incorporates the Solana conference, coming up in September 2024 in Singapore. This will be the largest community conference and will bring together the Solana community and companies across the Solana ecosystem, such as Star Atlas, Marinade, Superteam, MarginFi, Zeta Markets, and more. What's more, the blockchain network is witnessing a surge in popularity with record-high active addresses, exceeding an impressive 1 million on some days. This means a lot of people see potential in crypto assets. Let's listen to Tom as he breaks it down further.
I think 4x is generally what we've seen, but the sample size is, I think, 4, so that's not really super predictive.
And so then you get to include 2025, right? So maybe that happens 6 months into 2025 and not in 2024. So.
Exactly. And, everyone knows the themes we've beaten them to death here, sort of having ETF, soft landing on the macro side, rate cuts, blah, blah, blah. I think, roughly 2x for Bitcoin is a solid base case, and then beta off that. So Ethereum has lagged Bitcoin precipitously, roughly a 3x there, seems somewhat reasonable. And then, again, 4x on Solana, which it's out today, but that really hasn't affected the price. And it's because I think a lot of people actually haven't really used Solana. So I have a Solana Saga mobile phone, which is like the biggest money maker.
Nice.
Since, like, I don't know, like hitting the lotto.
Thing is just fantastic. Catching airdrops right now as we speak. Just they're flying in.
Every day, but regardless, it's so freaking easy to use this thing. Like I just go on there and I can trade it's easier to trade on my Solana mobile than it is to do in my Merrill Lynch account. Like, what the hell is going on with Ethereum? And it's only going to get better, right? Mobile is the biggest untapped use case in crypto. So if you they just sold out 60,000 new Solana Saga 2 phones, right? So I'm so bullish on Solana right now, despite some of these outages. So I think that's a solid price target for the year. We'll see though.
Yeah, I mean, it's like you even just mentioned right now, doesn't the price? I said at the beginning, I think price like $94 or something. Let me look at Solana. Yeah, we're at 93.95. I mean, started the day at 96.59. A couple percentage move at worst with a major outage, right? I mean, Solana engineers to deploy fix as network suffers major outage. And what's crazy is it's been years since this happened. They had finally killed this narrative. Guys, it's been years since we've had an outage. No, right? We fixed it. Fire dancer's coming. This is a big outage. Do you know why? I haven't dug in. Do we know why this is happening?
If you're trying to get 200 millisecond, synchronous transactions, stuff's going to happen. But, in terms of just the broader narrative too, I think a really simple mental model for this is all of these airdrops are happening on Solana for Jupiter and others. And Jupiter's only 1/4 the way done with their airdrop, by the way. They still have 30% airdrop. You have this huge wealth effect. So if I just got a shit ton of Jupiter, Bonk, or something like that, I'm probably going to keep it in the Solana ecosystem. I'm probably going to spend it. So there's going to be a ton more of those, and you're just going to see that money slosh around in Solana. And once people use it, like I did, it's just night and day of Ethereum. You're just kind of what am I doing here? What,
They are there ish with UX UI, which has obviously been the major problem for Ethereum. I almost have a coronary every time I need to bridge an asset or try to figure out one of these things that's going to go wrong. It is much better, objectively.
Agreed. And I think the narrative with Ethereum will certainly circle back. Not generally bearish on Ethereum, because I think if nothing else, it's been beaten down this cycle. I just think the path to actual strong user experience is much longer. You've kind of heard the Ethereum researchers come out recently, because there's been this whole FUD of, oh no, the liquidity's fractured. Who needs another L2? We can't even get in between the major ones today. And they're like, oh no, it's all going to be fixed in 2 or 3 years once we have shared sequencers and all this like stuff they're still developing. It's like, well, people don't want to wait 2 or 3 years when we've already waited 4 or 5 years to kind of get to the point we are today. Like people just want to use this stuff, and developers want to be able to build useful applications. So I think Solana is the closest to that. And there's others, right? Like Aptos Sui and others on the private market side. We're seeing a ton of protocols that are building there as well. So I think Ethereum's either going to hurry up or some of these other ones are really going to steal a lot of market share quickly.
These people coming into Solana for airdrops and using the phone, do you think there's any new people?
Totally agree. Still waiting for the killer use case. Still waiting for it, right? So like, what is that? So I just think of these other applications that you could download on your phone. And that's why one of the reasons I'm bullish on Solana, because they're actually tapping into that mobile landscape. These applications that, like Sweatcoin or something, right? I just download the application, I get free tokens, and great, I don't even know I'm using it in the background. There's other ones that, track your location data or track your noise data. And all you do is just earn money in the background while your phone's running. And that stuff is like, okay, great. Mom and dad could like download the app if I tell them to. They don't have to worry about like bridging to any chains and stuff. And right now they're getting tokens, but in the future, a lot of these applications could provide you USDC or whatever dollars. And I think that's the direction we're going. And that kind of moves into one of the next predictions I had here is really just like chain abstraction, right? You're going to be moving to a world where you don't see things behind the scenes, right? You just interact with whatever application you would like. You fulfill whatever use case that is, and great, you probably get some tokens today, but in the future, it's probably you just get some level of dollars. And you're able to seamlessly transact on chain, whether that's doing finance or kind of otherwise. But I think we're going to move quickly away from this world where we're siloed in individual chains, which again goes against kind of the L2 centric thesis that Ethereum is pushing forward with. Yeah, and this is for it would be great if Scott Melker could send transactions without folks looking at it, but it's really about financial institutions. And Solana actually built this in their new SPL sort of rollout with their token frameworks, that you could send anonymized dollar amounts to people. So it's like if you want to pay your employees in USDC, you don't have to see like, Tom's getting $5 for blabbing about crypto all day. You could, so that's great for that protocol, but protocols like Elusive and others are making it so I can send a transaction, you won't see my wallet, you won't see the end user's wallet, and then you won't see the amount at all. And they're building directly into wallets like Soulflare, and they're potentially a bunch of others. And if you could go on your wallet and say, today I want to send money to somebody, and just click like 0.1% more, I'll pay to have that transaction anonymized. I think a lot of people would do that. So it's great for you and me, but it's even better for institutions who need to actually have this anonymity. And if folks aren't familiar, they have this already today in traditional finance through what's called dark pools. So you send your money into, this is run by like a big brokerage house like JP Morgan or something, and they match your transaction with somebody on the other end who wants a similar size transaction on whatever shares you're looking to trade. So being able to do that on-chain, anonymized, decentralized is just like a natural next evolution of finance that we're seeing here. And there are a number of protocols that are doing it. In terms of like the underlying technology that actually makes that happen, it's all moon math to me, but like you're going to hear like ZK proofs, you're going to hear fully homomorphic encryption, you're going to hear MPC. And in terms of like which one is going to win, my very layman's person sort of perspective, and from what I hear from smarter people than me, is that ZK proofs are really, really good, but they're expensive to do on chain, and they're probably a bit further away than being fast enough for everyday users. So these other two technologies are going to kind of maybe bridge the gap, and you're going to hear these acronyms all year and a number of protocols that are kind of coming through. But the broader theme is that like privacy is coming back on chain, which is something that I think is important, especially in the broader sort of regulatory regime we kind of see ourselves in. My prediction here is incumbent on, I think, two things. One, there will be a Solana futures market, and I think there'll be more futures markets launched throughout the year, because simply, these are money-making entities, and if crypto is increasing in price and the third biggest token is, in excess of, billions of dollars, I think they're going to want to list that and try to list that. And then Gary Gensler probably exiting at some point this year. He's already overstayed the average SEC chair term, I think, is like 2-point-something years, and he's already well over that. If there's more criticisms of him, I don't think the Biden administration really needs to have that headache on their hands. So I think at some point he either exits, we get Solana futures listed on the CME, and then that has the same path, right, that we have for ETH and kind of BTC that we're going down. But there also could be others here. There's wild cards, right? Like think about like Polkadot or something that is not that wasn't listed there. That's a quote unquote commodity in their eyes. There could be others that could be listed. Maybe not Solana, but I think Solana because the market cap.
There's a lot bold to say it out loud, even if you thought it, to be honest. Cardano. Oh, God.
Tom believes that Cardano is losing relevance and may be surpassed by a new interoperable blockchain. And it could be due to various factors, such as technological advancements, better adoption strategies, or improvements in interoperability. The success of a blockchain often depends on its ability to adapt to changing market demands and maintain community and developer support. If a new platform emerges with superior features and capabilities, it could attract users and projects away from Cardano, leading to its decline in relevance within the blockchain ecosystem. This could happen when projects stop launching. This could signify a lack of confidence in Cardano's capabilities or a shift in developer interest to other platforms. Active addresses drop below 30K. A significant decrease in active addresses may indicate a decline in user engagement and adoption. Daily transactions below 50K. A drop in daily transactions could suggest reduced network activity and decreased utility. Let's go right back to the interview and listen to Tom break it down.
When I started working at Masari, I actually came in the room and I was like, hey, I want to write about Cardano because no one's written about Cardano. I wanted to write the bull bear case. And met with a lot of smart folks in the ecosystem, still keep in touch with them. And this is a bit, I know folks are launching protocols here that are helping bridge the gap and the issues with Cardano today. So what are the issues with the Cardano today? No stable coin, DeFi basically non-existent because of the, and you can see that just through TVL, because of the mechanisms of the protocol, and they haven't changed that. And then you have like what I'll call megalomaniac at the helm who's unwilling to change or adapt to the ecosystem. So projects are immensely frustrated and they're migrating off and trying to find new avenues. So I know this from being behind the scenes. So this is a bit of a inside baseball prediction. So, these other protocols that are going to be launching are going to say, okay, we love a lot of the interesting things that Cardano's done on the tech side, but we're going to actually make DeFi and other things work on it. And then we're going to integrate with EVM to sort of bridge the gap and bridge the ecosystem to bring in all of those users who love Cardano, but can't do anything with it today. So, Cardano people might hate me there, but I think in the long run, it's going to be better off because they can actually do things with their ADA that they couldn't do today.